Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. Welcome, 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 everyone. Hope some of you enjoyed the last live stream, the market overview that Bob was on. If you did miss that, please consider watching the replay. Lots of good information on there. And by the way, if you're new here, please do consider subscribing, ring that bell, hitting that like button. Longer term viewers, please do like the videos and leave some comments. So I know Tesla Force is here. 1 hour Tesla Head and Shoulders. We'll take a look at that. We will take a look. I didn't get to this last time, but here we go. Here we go. Let's get right into it since I don't have as much time over the next few days. So tomorrow I'll be looking at the ADP employment change number just as a precursor because we have non-farm payroll for Friday. But then Fed's Bullard is going to be potentially market moving, and you have Powell's testimony tomorrow. So and then you have Fed Beige Book. So tomorrow is very, very busy, especially with Fed related things. So do not ignore those times of days. As we went over in the last session, a slight probability that there's no rate hike, but Bob and I both agree that there's going to be a rate hike. They should just consult us. Just kidding. You can see lots of red across the board besides consumer defensive today. So other than that, lots of red and, of course, some oil and energy. That was your green stuff today. After the close, we'll glance at a couple of these. We'll look at SOFI since so many people are interested in AMC. Take a look at Salesforce. At least going to check out those three tomorrow morning. I'm going to be watching Dollar Tree to see how they come in with everything going on. I love to play Dollar Tree every so often. It is a good little stock to play for my book. So that's on my radar screen. Not much else for tomorrow morning. I'll glance at a couple other things, but nothing major. Can we look at Etsy, please? I think we just remind me in a bit. Hey, Sterling. So let's take a look. Let's AMC. AMC all right. They're pretty much minor beat, but still negative EPS and what a minor surprise with revenue. But they're trading slightly higher, so not much going on. I mean, you can see how nicely it reacted with still left these harmonics on. So this was a really nice floor. And now the middle one, which we reacted to a few times, is the nice short-term base. So really, until we either get above 21 or below 14, not really doing anything with AMC, but those are the key levels to watch for with either a breakout or a breakdown. SOFI. And of course, I hit an extra key. SOFI, again, this is what I'm talking about. They're up actually with the earnings, so they beat. This will be another one I'm watching for a gap fill, but it's just a slight beat and a very slight revenue surprise, the upside. We're still coming out of this oversold condition, but let's see where it sits with relation to just in the weekly rotation zone. So even on a rally into $13.77 to $14. Going to start then targeting another rollover, and that would be really nice because there will, unless it sells back down pre-market, there will be a really nice gap play in my mind to target to the downside. CRM up slightly, up about $8, so it looks like they beat on EPS and revenue. But again, most of these are having the same pattern. Look, you're right back to that weekly rotation zone. So even on a continued rally, I'll just, again, be watching for another rollover in this with technology coming off that 200 week with a nice bounce. And with that big outside bar coming out of some oversold condition. But none of these are long-term plays. They're still just bounce plays to the upside. Etsy. Again, I'm still on the weekly coming off that harmonic and the weekly 200. There's a really good reason why I have these certain key averages and the harmonics on these things because you can get some really nice timing. Etsy, though, rolling actually down slightly after hours, but I'm still going to watch for another rollover in here with if we do start breaking below about 144, I'm going to start watching for the gap fill. back down. You can see coming off that harmonic really nice with that gap up, and it's still not a full gap fill, so I will start targeting the complete gap fill. Also, Etsy just bouncing off that significant level at 163.01. If we can get through 163, my next target is about 178 area with the declining weekly rotation zone, but I think then it will get the bigger rollover. So this, I'm still waiting for downward confirmation on a rollover on this, and then I will continue to target. Once we get the gap fill, then it's back to 111.92, the 98.47. However, there could be a little short-term play to the upside, but this is going to really depend on what the overall market's doing. If the NASDAQ's rolling over again, then this will probably get dragged down with it. And this is where I start watching for a potential rollover. I just need some confirmation. Let's take a look at Tesla. So pausing, could not get a close above the daily rotation zone. Could not even get to the next harmonic level there. With shorter term, I'm just watching this this prior, well, this 857, 858 area. Start breaking below that. I'm targeting 829 because we're into an advanced clear path move with eventual first target being 813 and second minor target being 803, but I'll really target the 795 area after that. 829 will be the first key area there. To the upside, with this nice level here, we got, what I'm going to do is bump this up because we got the little bigger pause right here and just see what that gives me to the upside. And again, what did you say here? 1 hour Tesla head and shoulders. That's horribly sloppy. It's more just a horizontal breakdown play, and those are the levels I target. I would not use head and shoulders targets for that. That's just too sloppy. Even on the 1 hour, it's more of just a breakdown play. You want a little safety with this. I'd watch below if you're in super bullish mode. You want to give it a little extra room. Watch around 849. The 1 hour rotation zone, you start getting below that, then you can start getting aggressive to the downside, or at least take some partial profits off the table. Let's see, my next area is now to the upside. The upside play for me, gonna bump this down a little, about 875. If we get above 875, I'll target the 890 area. Above 890, then I'm watching for the bigger run up to 913, and then major area would be about 928 to about 937 that I'd fine tune with intraday harmonics. And but I am not going to ignore that 915 area because that's where you have the weekly rotation zone. Okay, and it looks like, again, if the NASDAQ's strong and this can get a move on, I'm expecting, some higher prices before rollover. If NASDAQ's weak, I think this has run its gambit, even though it couldn't get to overbought condition, and I will start watching for that downward play in Tesla. Could I check out SU? Suncor Energy. Well, hold on. I don't want it on the TSX. I want it on... Nothing wrong with the Canadian TSX, but I do want the U.S. price action. Let's put on our longer term levels. So here's an example of the swings. So here's a longer term swing. Here's the most recent swing. So could not get the close above 31.17. Let's just take a look. Was there a topping pattern up there? No, it was just the gap fill play off there. But let's see. That's actually back to this very key support with the rising rotation zone. So even on a pullback, even to 30, I'd be looking for a rotation back up. Little overbought on the 4 hour, but daily, if it can get another rotation back up and hold this key resistance becoming support, then I would target the roughly 32. I'd just split this right in the middle and target 32, and then on a continued run higher, about 33.86 to the upside. The only thing that would change my longer term bullish position on this, and watch for the bigger pullback, just seeing where the weekly rotation zone is, which is really nice because you have, look at that, with the weekly 200 just below this key area right in here with the rising rotation zone. So your major support's coming in at 26.75. So any long-term positions, I'd have my stop still below there. Short-term, if we started breaking below about 29 bucks, I'd watch for the bigger pullback. But until that happens, you got to trade the short-term trend. But again, longer term, would still be bullish on this. So again, a lot of this energy, I'm still watching for some longer term top or some short term topping patterns, but then some long term things are getting a little overdone. But this is reload, and energy stocks tend to be a little volatile, so you can generally get the bigger pullbacks and then reload on positions for the next run up, especially since it's all going to be volatile because of the Russia-Ukraine. Apple thoughts looked weaker today. Apple, again, this is more of a pause and rotation down with the bar, but again, as the broad market goes, so will Apple. It's been holding up pretty well, but you start getting below about 162. See, 162, you have there were not a lot of stopping points in here. This is why I watch for clear paths. So you start breaking down this little, here's a good 162, that's what I said, and look at this. You got that little 1 hour pausing shelf right there, retested at the end of today, a test from over here. You break below that, you're into this clear path move, and the first target's 158. You don't have many stopping points. And then I'd be careful on below 162 because this would be a bearish rollover from the rotation zone, and it cannot still hold that 200 on the 4 hour, and you see this rotation zone on the daily. The only way I'd start getting more aggressively bullish on Apple is if you could get a close above 168.50. Above 168.50, you're still in a lot of chop, but that's the only way I could get short-term more aggressively bullish on Apple. Otherwise, I think we're rolling over and easily going to retest these 152s. And longer term, I'm still looking for Apple to break down to some lower harmonics. I think this is just a short-term bounce, personally. And longer term, I mean over the next easily month, we could see this and lower prices. Amazon's nearly same pattern as, see, everything's trading so similarly. I mean, you have different nuances, but look at this little run up and pause. Compare that little run up and pause, little run up and pause. So that's what I'm saying. So many things are trading in high correlation together. Your Amazon play, let me bump this down. You start breaking below 29.90, then you're back into, look, here's this thing, here's the same thing. You're into another clear path move, and you can target 29.27, and then you get below about 29.06. I'd watch for a return to the lows. That's what's interesting. And those lows are near some major support. You break down below that, then I'm using those harmonics. What would change my mind to get more bullish on this? I could take these off now. What would change my mind to get more bullish? I'd have to get above, to get bullish at all, if we could get above about 31.65, you get above 31.65, I'd see a return to the 200. But as long as you can't get a close above 31.65, I would favor, in these market conditions, I would err on the bearish side. But I wait for that confirmation below the 29.90 before I did anything, because if it just drifts sideways or doesn't get a momentum below there, it can just sit in this consolidation range. Yeah, algos do what they do, and a lot of stuff is just, they're still trading these mega cap stocks all, it's sort of still like one big stock trade for the mega caps, and that's what's interesting, and that can really cause the some strong rallies and some very strong declines. Let's see, I think that was all we were going to look at today, unless I see something else come up, because I have to call this one a little earlier. Again, oh, thank you very much, Abraham. Again, appreciate the super chats. Keep the channel going. So that really does help. And if I do analyze a stock for you or a bunch of stocks for you, please consider to do what Abraham just did, who's a longtime supporter of this channel, and consider a small donation to help keep the running smoothly and to help compensate some of my time. By the way, if you are new here, please consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, definitely hit that like button and leave some comments. And with that, I will be doing another market preview tomorrow morning. And then we'll have our regular scheduled, even though they might be quicker for the next few days, just because my wife is traveling and I have to manage the 5 dogs and at-home business myself. I will be still here and available to everybody because we got a lot of Fed stuff going on tomorrow. We have a super busy week the rest of the week, and we have the ongoing Russia-Ukraine situation. So we have to stay on our toes with our technical analysis. And with that, I will bid everyone a wonderful evening, and I'll talk to everyone later. When's the training coming out? I am still, with the short-term training, I'm going to try to get published in the next few days for the long-term system, and the other stuff I'm still working on. With that, again, my priority right now is to also keep, because if you want me to stop the live streams, I could get the training out quicker, but then you don't get the daily analysis, so you just have to let me know which. I think it's more helpful right now to have some daily analysis because I still give a lot of teaching stuff in the daily analysis. And I think a lot of people pick up on a lot of stuff I teach anyways, from showing even stuff like clear path moves to doubles. You can start trading this stuff easily. No, you want me to keep the live streams or give them up? Which is more beneficial? Genomic, live stream, and I can just work on pumping out classes, because that would be, I think that, it would probably make me more money, but it would be selfish from my perspective. If it was calm sailing, I was not expecting the markets to be this turbulent. I was expecting to be, keep the live. That's what I thought. And that's why I'm doing extra teaching, because I want everybody to be able to navigate these waters, especially since we've had that long-term sell signals have triggered, so we could have some major upside and downside volatility. And if you're wondering what to do with your stocks, I would rather be here and spend some extra time with that. And when the markets calm down, I can always dedicate a little more time to pumping out the training even quicker. So that was my strategy. If you disagree with it, let me know in the comments. And with that, I will talk to everyone later.